Trading or long-term investing, which one can actually help you build wealth? If you are new to money and investing, this is one of the most important choices you can understand. Trading can look exciting because prices move every minute. Long-term investing looks slower. But slow does not automatically mean weak. In this video, we will compare both approaches, look at risk, time, costs, emotions, and the power of staying invested for years. Trading means buying and selling assets more frequently to try to profit from short-term price movements. A trader may hold a position for seconds, hours, days, or weeks. The attraction is obvious. If you correctly predict a move, the profit can happen quickly. But the opposite is also true. A quick move against you can create a quick loss. Trading also requires research, a plan, risk management, discipline, and often a lot of screen time. And every trade can involve costs such as spreads, commissions, or taxes depending on the account and activity. The biggest challenge for many beginners is not finding a strategy. It is controlling emotions. Fear can make someone sell too early, while greed can make someone take too much risk. Long-term investing takes a different approach. Instead of trying to predict what a stock will do tomorrow, an investor may buy diversified investments and hold them for many years. For a USA investor, examples can include broad market index funds or ETF, depending on their goals and risk tolerance. The idea is to participate in long-term economic growth rather than constantly trying to time the market. This approach still has risk. Markets can fall, sometimes sharply. There can be years when your portfolio loses value. But a long time horizon can give you more opportunity to recover from temporary market declines, provided the investments and overall plan are appropriate for your goals. Here is where time becomes powerful. Suppose someone invests a fixed amount regularly and earns a positive average return over a long period. Their returns can begin earning returns of their own. This is called compounding. For example, investing $100 every month for decades can grow into a much larger amount than the total cash you personally contributed, if the investment earns returns over time. The actual result is never guaranteed, and real returns fluctuate. But the key lesson is simple. Time in the market can give compounding more time to work. That is one reason long-term investing is often considered a practical starting point for people who do not want to spend every day watching charts. So which one is safer? Neither trading nor investing is risk-free. Short-term trading can expose you to rapid losses and the pressure of making repeated decisions. Long-term investing can still experience major market declines, but the strategy is usually less focused on predicting every short-term movement. Diversification can help reduce the impact of any single investment, although it cannot eliminate market risk. Your emergency savings, debt, income, age, goals, and ability to tolerate losses all matter. Never invest money you need for immediate expenses, and never assume a past return will repeat in the future. So which approach makes more sense for most beginners? If your main goal is building wealth over many years and you have limited time, long-term diversified investing is often the simpler place to start learning. Trading can be a separate skill that requires serious education, testing, and risk control. You do not need to choose one extreme or the other. The important thing is understanding what you are doing, knowing your risk, and avoiding decisions based only on hype, fear, or a promise of quick money. If you are starting from zero, focus on the basics first. Build an emergency fund, understand your expenses, learn how investing works, and choose a strategy that matches your goals and risk tolerance. Remember, this video is for education, not personalized financial advice. If you found this comparison useful, subscribe for more simple finance and investing videos. And tell me in the comments, trading or long-term investing, which one would you choose, and why?